I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.
Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call. So futures are flat this morning after a roller coaster type of week last week when the Fed announced on Wednesday that it would not taper as expected, which of course lifted markets. And then we saw Thursday and Friday take back those gains. So heading into this week, Scott, what do you expect?
Yeah, I think there's some positive and negatives. Like last week when they did not do anything, I know for me, I was like, why wouldn't they do anything? You know, the market is like, it was give them a softball. They said, okay, here you go, taper 10 billion. We're already pretty much in line with that. We think rates could be higher. We're getting comfortable with that. You know, with commodities going lower, good for the consumer. Market's been up a lot already this year. You know, maybe we can get some more gains, but it doesn't have to be so pent up. Then all of a sudden Wednesday, market ignited. Okay, only to give it back on Thursday and Friday. So a lot of investors are coming in, and a lot of, you know, even traders are saying, what's next on a short-term and intermediate time frame?
Well, let's take a visual then and take a look at the S&P.
Well, you know, with the S&P, you never want to see a breakout failure. And right now, at least you take notice of it just in case. So if we do go to the chart of the SPX, you will see that, you know, here's a very strong trend that's been intact since November. Boom, all the way up. Here's where it got tested in June when it held the 100-day. Then again here in late August before this September move. Okay, but you want to take a close look at short-term technicals like I like to do. Okay, look right here. First of all, you know, this was the prior high. This was right there. It was what, 1698. Pushed through, okay, and then failed. So that was a push-through failure. Okay, from there, consolidated lower before pulling off 4.5%. So right here, when we hovered in front of the old high, that old high being 1709, pushed through when the Fed did nothing, gave you a small inside day, and then came back right into that area. So that's not something you want to see if you want to play for momentum. But on the bullish side, still above the 8-day. Look where the 21-day is. So maybe the bulls are a little bit spoiled from this pain trade. You know, if you were short here, you're probably covered and you're a little upset. If you weren't long here, you might have added and you could be a little upset. So there could be a lot of upset people now. So at this point, I think that guys will be measuring some of those areas in the market, probably a little flat. You know, but stocks themselves had a really nice week. You just had to have the right stock selection and, you know, just, you know, move your feet pretty quickly.
And gold as well. Gold got a move when the Fed did not taper, which caused a lot of people to call for a new bull market in gold. Do you agree with that?
Well, we talked about that. You know, we said before you call a new bull market in a sector, let's see the commitment to it. And with gold, you know, it's been in a downtrend for the majority of 2013. Late June, we played that blood on the street lows with the GDX, with the miners and gold. So, you know, when gold ignited on Wednesday, I'm like, let's take a look at the miners as well, just to see if there's any validity to that call. You go to the chart here of the miners, and you will see, you know, first of all, it's been in a major downtrend, you know, for such a long time. So to come out and just call a new raging bull market, a little irresponsible. But then if you take a closer look to see it, okay, here was the move. This was a nice igniting move on Wednesday. Engulfed this lower end, came into resistance. If this was going to be any good, should have held above 28 or maybe even 27.5. Instead, gave back half of that move before giving back the rest of it on Friday right back into support. So you better know this support if you're a miner, you know, you invest in the miners and you believed in the new bull market there. But anyway, so what do you take this and how do you save yourself money if you're in gold? You say, oh, wow, look at this big move down in gold on Thursday, more than it should have been. Maybe it's leading the market, okay? And then in GLD, you'll see that on Thursday wasn't as drastic. First of all, remember the blood on the street lows here. You had your move right around here. You know, the miners got a lot weaker also, I remember, which got, you know, me to say, you know, I'd rather be a seller of GLD above 135 than a buyer like, you know, below 120. But anyway, so this was Thursday, doji, you know, up here. So that could have given you some clues that it might at least need some time instead of, the downside that it saw. Now it's down a little bit. So I guess use 127.90 as a pivot just in case it wants to go positive. But overall, this downtrend has still been very, very strong in gold and in the GLD. So, the bugs out there who keep trying to call for major things in there, sorry that this take, they still have a lot to prove. This is the top. This is when it broke here. This was when it broke this major, macro support. And now it's still just hovering down here. And, wait till at least breaks above there before you say, okay, we're in a new historic gold run here.
All right. Well, and meanwhile, there are lots of stocks that are still acting well, taking turns breaking out as rotation continues. And the best performing group, as it has been since it's been in a steady uptrend since August, is the biotechs.
Yes, the biotechs have, they did not pull in as much in August like everything else. So on the positive side, if you want to stick with a strong group and want to make sure it stays strong, you look at the IBB. We talked about this, I think, last week. It's still above the 8-day, above the 21-day, above the prior 2013 higher. So, this is somewhat of an ascending channel here. So you just want to make sure you know where that line is, to make sure it has commitment. We've talked about so many different stocks in this group that continue to act well. So, make sure that it stays above 208 here to stay in the same trend above the 8-day, which it has been since August.
The transports as well has been leading the market up for the past 3 weeks, and the IYT actually made a new high at 121 on Friday before seeing a pullback.
And you look at this, it's still above that level, whereas the S&P is right at that level. So you want to see how this plays itself out. And if you look at the transports right here, this was the prior high, nice breakout on Wednesday. Held pretty well there, okay? But it's extended from the 8 to 21, so you maybe need some time to let it catch up. So, and the bullish side would be if this thing can maintain, 118.60 to keep the market intact.
And we often talk about how we watch the financials to gauge the market's direction, and the financials did not make a new high with the overall rally last week. So that flashed us a warning sign.
Yeah, that gives you that nice healthy dose of skepticism where you don't need to be all in here. Even if we go to 1740 to 1770 at some point, it might not be this week. So with that said, the financials, met the highs, okay, and then kind of failed, okay. It's still above the 8, or it's right at the 8, right near the 21-day. So that's a sign that, okay, we're not in a roaring tape right here, and that could have given you some signals not to, start putting way too much risk on late last week to give things more time. So now you take a closer look at the XLF and you'll see, I would say 2023 is a pretty big area. It's got to hold here in order to then maybe turn up. If it doesn't hold the 21-day, that could give us some flashes that, again, that push out, the breakout failure in the S&P might lead to some type of corrective phase in the early October.
Right. And just like we watch the financials, we also like to watch the home builders, which of course got a great move on the no taper announcement, but then sold off on Thursday and Friday.
Well, this is a kind of something to take different because this has been a weaker group. It bounced and then had a potent move on Fed Day because of their interest rate sensitive sector. So the question is, when something might change complexion, you want to measure it closely to see if that move was real or it was over emotional. So you go to the home builders and you will see that, first of all, held big support into this 28 area. This was the area that we were talking about as a macro support line. Then it ignited here, flagged, went again, and then this was a nice move on Wednesday, only to get a little red dog reversal. Okay, so if you saw the size of this move here, some people maybe took a cute short, or at least got out when it pushed through this prior high of 31.89 and closed lower, and right on that close too is probably a little bit lower than some of the bulls would have wanted, and then boom, took it all back on Thursday. So now I would say watch this. Okay, let this has to hold this 30.23. In order to mute some of the damage here. Okay, maybe you wants to retest this before going again, but ultimately, if it starts getting below this breakout failure, is more bearish than bullish.
And consumer staples, meanwhile, even further on the weaker side, the XLP had been having a nice run for the past couple of weeks, but we saw a pullback on Thursday and Friday.
This is kind of like in the camp of the financials for more Dow stocks. It did not make a new high, came off quickly. So with that said, there's not always momentum in the market, and here came back up to old resistance and failed. Okay, you saw a small red dog reversal here, pushed through the prior high, came back below it, capping off what's been a tremendous move since the lows there. And now you take a closer look. You've had 2 days to downside, and now I would say, in order for this to to stay in anyone's radar as far as the traders are concerned for a potential move higher, you would think it would want to, hold above 40, 60-ish.
Well, we always like to look for relative strength in the market. We're going to go in the trenches with stocks that acted best on Friday, right after this quick commercial break. We'll be right back.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our 2 very popular newsletter products, Off the Charts and the Price Point Sheet at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.
Falls asleep. I think it's down like this, right?
We're back and going in the trenches with stocks that acted best on Friday. Google actually managed to not only hold up well on Friday, but close on highs, and this one has been acting well in recent weeks as well, above all key moving averages, and looks like it could be setting up to be the next $1,000 stock.
Well, people thought that this would be the first one, and it wasn't. Priceline actually hit 1,000 last week, which is kind of crazy, but it did. It is, it is what it is. With this one, I think it's fundamentally a bit more rock solid. It takes a little bit more time, but anyway, the base is here. It's been 4 or 5 months. This was the 2012 stock, high beta play of that year, and since then it's been a good trade. And also for those holding it in the drawer, congratulations. And now the question is, can we get a really nice trade from here through year end towards 1,000? So if you look at the chart, you'll see right now that you have a really nice upper base. Okay, it did get a little weaker, after earnings, and you had this small downtrend that triggered to the upside right there within this upper channel. Okay, and then from here had some commitment, broke higher, and then look at the last 2 days of last week, pretty weak, and Google held in there. So with that being said, it's worth having on the radar. Okay, if it were to start breaking above 906. Okay, that would be another add-on buy, and then here is the highs here of 927.97. So ultimately, really hasn't done much since May. So you have May, June, July, August, September, almost 5 months of accumulation here. So if the market doesn't fall apart, because Google's going to need a little help in the market, this could be something to target for the 4th quarter for a move well into highs, and perhaps just like Priceline that hit a 1,003. It could be one of those, and let's just stay with it as long as it continues to stay above the 8 and 21-day moving average.
Facebook looking good too, managed to close the day up 3.3% at an all-time high 47.60 on Friday. So will this be on your radar today for some continuation?
Yeah, but it's not as exciting as it was last week. Last week it pulled down to the moving average we've been watching, and could have given you that red dog reversal at 42.40. You look here at the chart, you will see what I'm talking about. Broke the 8-day, reclaimed it real quickly. It's been an unbelievable trend ever since earnings. This was one buy price when it triggered above this area. Another nice setup when it triggered above this prior high. Then again here, and then even when it crossed above 45.62. So here at 47.5, if you're in it, great. Hopefully you took a little bit off on Friday as it got extended, and there's nothing in the way anymore. Now everyone out there starting to cry valuation, but whatever. Stay with it until the trend changes. It could have happened right here, but it didn't. And I think a lot of the traders on the floor are having a good time with this one because it's been pent up. You could trade it through levels. You could take tiers on, tiers off, and stick with that until that changes. Let's just hope that the investment bankers don't use this as an excuse to up the valuation of Twitter and become piggies and make that into a disaster IPO. I'd rather see Twitter be close to 12 to 14 billion val versus more.
All right. Well, Netflix as well put in a new high on Friday at 315.89. Did see a controlled pullback after that, though. But is that opportunity? Yeah,
and I think they did. Congratulations to them for winning an Emmy. Okay, right? Arrested Development, or anyway. With that being said, not that I watch it. You look at the chart here. Every now and then, you get a really good setup in Netflix. Okay, after this consolidation, this was a nice continuation buy. Moved up, consolidated, nice continuation buy. Here was your last wide range bar, and I think some analysts started bashing it once again, and then it held in there. And what did it do the whole time? Look at this. It held the 8-day moving average the whole time. Okay, so overall, very strong still. And then I think some guys jumped on it quick above 309. You had a quick trade. Now let's see today. If it goes through 315.89, it can continue. Ultimately, every tack-on trade gets a little bit more difficult to handle. But again, as long as it stays in a strong trend, don't fight it. Take your trades, make some cash flow, and if you've been an investor in this with Carl Icahn, congratulations. You probably did real well.
Tesla also provided some 2-day opportunities last week on Thursday and Friday. It was able to tack on another 3% on Friday. Where can we get a piece of the action heading into this week?
Again, setups. Last week was the setup. Last week we were getting, okay, Tesla's getting tight. The market just went up. Always gives you an opportunity. Doesn't like to be tight too long. And you look right here, boom. Okay, here is your nice scenario here. You know, I think some of us on my VTF, I got a long Tesla right here. We were trying to add on it above 171 or 174. And then even on Friday, it opened at 178-ish. You could have bought it through 180.47 and it hit as high as 185. Now, you know, after a 3-day move, you know how I get. I always clam up a little bit. I don't like to chase something. So we'll see what happens next. But ultimately, look at all these areas for opportunity right here, right here, right here. You know, and this was another one. And what a coinky dink. It's been above the 21-day moving average for the entire move. So all the naysayers out there, you know, don't listen to them until you have a break like this, which could have been over for a while, and then follow through. What happened here? Red dog reversal. Since then, it's been holding it, and the trend has been unbelievable.
And eBay has been inching higher after regaining the support of all key moving averages. At what levels do you see some opportunities here?
You know, this one has been like an elevator, up and down, and it's very quick when it happens. I think some news, or it started acting better when, you know, the Apple had their invite because, you know, they didn't include one of the features that eBay uses that they make money off of anyway. I'm not going to get into that. You look at the chart. Chart looks pretty good, you know, like almost it could get you sick how many times it's been up and down, but ultimately at some point, you know, it does seem like it could take out this level. It's been here for a while now. You know, overall though, it seems, you know, it looks like it's going to need time. Nice upper channel after absorbing what's been a huge move. I don't see anything clean for a day trade, but if you're in it and you're swinging it, stay with it as long as it stays above the 8-21 day. But, you know, very choppy trade here, as, you know, if you buy it on the highs, you don't always get rewarded. So, you know, just I would say stay with it as long as it's above 53-ish, and at some point maybe it turns into a better trade.
All right, time for some quick hits here. We're going to talk some stocks that look extended and could use a bit of a rest. Amazon being one of them. It extended higher to put in a new all-time high at $320.57 before seeing some profit taking into the weekend. So this one is one that could use a break.
Yeah, this one let it have a break. 302 last week. We had it on the price point sheet. You look real quickly here. What a mover. So many people keep getting caught with their pants down here. Last time it came and retested this prior breakout, you know, after being lethargic after earnings. Then you had this quick descending channel break to the upside. Some caught that. If you missed that, you had a bull flag right here above 302. Boom, look at that move. That's been crazy. Anyway, very extended. Give it some space.
MasterCard had a nice run since August 30th, but you see some signs of exhaustion here?
Yes, I'd rather see you buy MasterCard closer to 670.
All right, and Boeing also looks pretty extended. Started to see some profit taking on Friday as well.
I want to just show you with Boeing, you know, how you could look at a stock and just use the red dog reversal, and I guess you're showing it already here. But anyway, with that being said, this was, you know, in the 2013 thesis to start the year, really nice tight pattern, you know, boom, it broke out, and it's been in an unbelievable trend, exceeding all of our estimates. So anyway, what happened here? A red dog reversal after a huge move. So that was your exit strategy, right? Open up high, trade through the prior day's high of 119.52, closing the lows. You know, that was get rid of some, and some even looked at that as an area to get short, okay? Opened up, went below this area, boom. Next spot to watch for this is 114.93.
And how about Las Vegas Sands? Had a good move, 57 to 65 in just 2 weeks. And although upside momentum has started to slow down, you think maybe it could just use some digestion here?
Yes, I would not be buying it up here. We talked about this in Morning Call together, I think 3 weeks ago, around 55, 57. And then I even tried to short it, you know, because I missed a lot of the upside move and it got me out. And now you look at the chart, I would say, you know, for this scenario, this was when it was tight, right? Remember that? That's when we were starting to look at it. Here is your move. You know, gave you a chance to maybe it could have come in and it didn't and been held the gap. And now, you know, looks like maybe 50 or 64. Okay, look at 64 perhaps as it hugs the 8-day. That's your spot to buy in. I don't want to see you chase it there.
All right, so what will you be focusing on as you begin the trading session today?
I just want to see what we have after 2 days of weakness. Do we, come in a little bit and then regroup and then have a spot to trade against? Again, I'm going to look at the similar pattern that we saw in July when, you had that breakout failure. Didn't lead to downside right away, okay, but it gave you a corrective phase for opportunity. You never want to see something push through and fail. And there are signs that we just showed you, positive and negative, on what could happen in the next week. So, watch Friday's low in a lot of key stocks. If we start getting below there, hands off. If we go through, come back up, and start to digest higher, perhaps the trend continues. Trends change as far as their speed and their complexion. September was very fast and furious and caught a lot of people off guard. So I think even the bulls would like to see somewhat of a pull-in, but hopefully we hold around 1680 if that's the case. If we don't, then just position yourself. But really the key is finding the setups. Last week we talked about the setup in Tesla. It didn't matter what the market did. Talked about the setup in Facebook. And then even real quickly, just to tie it in, Apple. There are times that it looks good and better than other times. And, right around here is when we got super excited, right? Breaking the downtrend, gapped up, took back the 200-day here, and then the trade changed. And the trade always changes. When it broke below 503.50, that's when it changed for me. And if you got out there, you had a little bit of a luxury of trying to buy here, versus prior level. And then from here, 3-day move, I was done with it somewhere around here. And then it was up on Friday, and I said, I'm like, if you look at my day 1 through 4 strategy, I probably wouldn't be a buyer on day 4, considering also you had a gap there and then boom, engulfed it. So now, as far as just treating this like a trade, you have a pivot here at 466, and I would say in order to stay somewhat relevant at all, it's got to hold above this 460 area.
And with that said, that's your morning call for this Monday. Happy trading. Have a great day.